Hi everyone, it's Thursday afternoon. We're doing a chart of the Dow today just to show not much has happened. It's been a week since our last video. And this is where we were here, and now this is all that's happened since then. After our decline, we've labeled this as wave 1. We're keeping the main count like we've been showing for a while as the ABC. And the Dow, the C wave went a little higher, got closer to 76.4% than the 61.8 like the S&P did. And then the decline, and then the Fed started talking about never letting the market go down again. So this is what's happened. Got real close to a 61.8% retracement. This move right here stopped just shy of it. And it seems like that's because the market didn't want to overlap this top of this A wave, which could potentially be, as we show right here, an alternate wave 1. And that's why the market has stopped right here. And then the Dow, that's the reason we're showing this Dow chart. This we can count this as a 3-wave decline instead of a 5-wave decline. Easier than in the S&P. The S&P really looks like 5 waves, but this looks like an ABC, possibly. But we kept our 1 here till the market shows us it's not. And this is the only count. There's 3 possibilities here, but the only possibility of the downside is what we've been showing all along, that we have a minor degree wave 1 and a minor degree wave 2 here with an ABC with C. Well, in the S&P, C was right on the 61.8% retracement. This is wave 1 down. Needs to do 5 waves down for minute wave 1 and needs to break this low right here. And that is the only downside possibility. And the other 2 possibilities are that, one, that this move right here, that's an alternate is minute wave 1 of minor wave 3. And this is minute wave 2 of minor wave 3. And we're getting ready to start. Come up, this pink line right here represents the high. So this would take us to a lot higher highs. The other alternate is that this is wave 3. And this is wave 4. And this is an ABC, came close to the 61.8% retracement of this move here as wave 3. And now we're just going to get a 5th wave rally that won't be really very substantial because it can't be longer than this move right here. So that gives us projections that are pretty definite if that happens. But for now, we just keep the main count, and watching this move right here really looks like a little impulse move. Market could be doing a ABC here and still get one more rally, and but it can't take out this high right here. So this move right here to complete an A and a B and a C, wave C can't be very big. Be a complete retest of this high, but on a break of this high here, either one of these alternates will come into play, and that will do away with this bear count till a later date. So let's look over here at another chart that we showed the last time. This is where we were the last time we had made this low right here. We counted this as an A and a B and a C for a flat. And this small 5th wave down. The next day, or Monday of this week, we got wave 4 subdivided one more time and just created a larger running flat, and then gave us the 5th wave decline. And just like in the Dow, here's the 61.8 just below the top of the A wave or the top of the 1 wave. So now a lot of the other indexes or indices overlapped right here. So we'll just have to keep a close watch on it, whether they were right and the S&P and the Dow's wrong or what. And we show this rally as an ABC. It really counts as 5 waves. It counts as 1 and 2, 5 waves are 3, 4, and a gap up right here that was a failure because it was retraced completely. Exactly, so that was your 5th wave. This would be a B wave, all of this here, and then the C wave. And actually wave C could do a 61.8% and still not take out this high and create the same pattern at a smaller degree as the larger minute degree, the larger ABC did, with C right here being 61.8 for wave 2. This would be an ABC with C being 0.618 of A here for the smaller degree, wave 2. And markets do commonly do that. The larger degree creates a certain pattern, and the next smaller degree of that same degree creates the same exact pattern. The market could be doing, it's possible we could have A down, B up, C down. We could do D and E of a triangle. If that happens, then this absolutely is an AB, wave B for a triangle. So this would be A up, B wave triangle, and C wouldn't take out this high. And if it did take out this high, it would probably be a irregular B wave, and then the market would decline again. But it would take out all the bearishness, even with a minor new high right here as an irregular B wave, would take out, all we'd get is a decline back down to here. It would take out all the bearishness, and one of those alternates for a 3rd wave higher would come into play. So that's all there is for now. That pretty much caps what's happening. So the market has gotten into retail needs the market to go higher as always, but with the Fed talking every time the market tries to go down, the market's in a real conundrum. It needs some bullish news, and unemployment at another 1.5 million, jobs lost 45 million now, close to 45 million or whatever it is total, and riots in the streets, numbers on the virus are increasing, restaurants are starting to close again, just everything in the world, so there's no bullish news, and the Fed won't let the market go down, and there's no bullish news for it to go higher, so it's in a real weird spot right here. So when something changes, new highs or a new low below here, we'll be back. We'll post another video. So we'll see everyone later. Happy trading.